Hello everyone, welcome to the Ichimoku Charts.com daily analysis for the Aussie dollar US dollar FX for Thursday, May 9th, 2013. Well, a continuation of the trend to the downside today. Very volatile trading session with some important economic figures being released. And as we were analysing this market for the previous day, we had quite a bullish candle that was forming and had potential to confirm the tweezers bottom, or the potential tweezers bottom that we saw here from the previous day's trading. The market had traded up above the high, so we were looking for a higher high and a higher low, and that bullish candle was suggesting that that was a possibility. But then later in the trading day we saw the sellers come in and sell this market off in a substantial way. And this really does show how it's important for us to trade with the higher time frame trends. Very short-term traders may have been tempted to take a long position based on what was seen, but when we consider that the market was trading down below the cloud, the Kijun-sen and the Tenkan-sen, we had a negative market in all three time frames. Now you don't want to be taking a long position against those higher time frames. It's like moving against a greater tide. It's a very difficult struggle. You want to be trading with that tide, and short trades would be the ones to be taking in line with those higher time frame trends. Now, in terms of this current candle, a very large black body candle and a resumption of the size of the bodies that we've seen in the recent past. So the sellers have now found some continued downside momentum in net terms. The sellers have made some substantial net bearish progress on the day between the open and the close for today's trading. They've managed to close the market down below the midpoint level and between the midpoint level and the low, and that suggests that they've taken control of this market. And the amount of control for the trading day is only moderate. They didn't close the market down towards the low. But if we look at the distance between the close and the previous close, it shows us that the sellers have extended the amount of keenness that they have. So quite a bearish day in terms of that. If we compare it to the previous day's trading, where the distance between the close and the previous close was much smaller, it tells us something about the strength of the sellers. Now we have a large shadow on the top of this candle, and that reflected that early trading in the market testing up above the 102.18 level and the area above the Tenkan-sen, and this highlights very well how the Tenkan-sen and the Kijun-sen of the market trades up there in the cloud can act as a very important and strong level of resistance. And very often when we see a market with downside momentum, especially in that short-term time frame, as denoted by the steep angle of the Tenkan-sen, the market retraces back towards there, and then there is generally very strong resistance found around that area. So here today, during the trading day, we saw the market sell off substantially from that area, with the buyers losing commitment. They lost commitment in a major way. Now, throughout the trading day, we saw the market take out the 101.44 level, an important level that halted price action for the previous 2 days prior to today's trading. And now we've seen that bearish close down below there, and the bearish close down below the 100.98 level, which was another important level, and the market traded exactly to this previous support level at 100.43, and we've seen some rejection from there. So that is a very important level for us for tomorrow's trading. If we do test down there, then the market could quickly test down to the round number $1, and that $1 level will most likely hold as a very strong level of support. The market could probe down through there, but it doesn't look as though the market is going to test down through there and maintain price action down below there. Although having said that, we do need confirmation, so that's just based on this market looking a little bit overextended if we do trade down there in terms of the distance from the cloud and the other Ichimoku indicators, and it's likely that we would see buying coming in, because it is really the most crucial level that will be remembered by all market participants. Now this 100.43 level, however, as I've mentioned, will be a very important barrier to that area. or to the potential trading down below there, and here we've seen already the market testing down towards there as it's currently trading for today's trading, and we have seen some rejection from that level as well. But now the 100.98 level comes in as potential resistance to this market, so there is potentially strong upside resistance here. Now, in terms of the Fibonacci extension, we're examining the relationship of the first time frame downtrend to the previous time the market's trending down, and the market traded in a bearish manner today through the important 100% level. Previous day's trading, we saw that indecisive spinning top type candle set the market up for a potential change of trend. We were looking for confirmation with a higher high and a higher low. We didn't see that. The market looked as though it was going to confirm that, but then the sellers came back in, traded the market down through the low to give us an outside day in bar chart terms, a day of indecision. But looking at where the market's closed, we really do have the sellers very strong in this market at the moment, and no sign of potential change of trend. But this interaction with the 161.8% level at 100.58 has been important. We've seen strong rejection from that level, so that does suggest that there is a possibility of buyers coming into this market, but the short-term dynamics aren't favouring that at the moment with the strength from the sellers. The question here is, however, have the sellers done a little bit too much work? We are trading a long way away from the previous close, and will we see some buying come back in? So what we need to do is react to this market and look at how it reacts, how the market behaves around this 161.8% level. At the moment, we're seeing strong upside price rejection from there. If we do see a bullish day for today's trading, then there would be potential for a change of trend following that. Now, if the market does trade down through the 161.8% level, then our next target is the 261.8% level down at 98.95. So that's down below the round number $100, and the market won't make its way down there very easily, or it shouldn't. We should see the market hold up around the $1 level, but if we do see the market trading down below there, it is a potentially strong target. In terms of the Fibonacci retracement, we're trading in a solid bearish manner down below the 100% level, so we have an extension of that. We're in an extension phase. We've traded down through the 161.8% for the previous 2 days trading. We saw price rejection from there, possibility of a change of trend, no follow through to the upside, or a lack of it, no high and high low. The sellers came back into the market, and the market has interacted now with the 261.8%, or just below it, at 100.57. So this just does suggest a possibility of a change of trend, but certainly not supported by the buyers at the moment. So the potential there is fairly weak, and what we'd like to see is some buyers coming into this market, and perhaps to take control and set up the potential for a change of trend to the upside. If the market does trade down through the 261.8% level, our next target is 423.6 at 98.94.5, and that's a long way down below the round number $1. Now, in terms of Ichimoku, obviously a bearish market in all 3 timeframes, with the market trading down below the cloud, so bearish bias in the long-term timeframe, bearish in the medium-term timeframe by trading down below the Kijun-sen, and in the short-term timeframe by trading below the Tenkan-sen, the green line here. And we have to ignore this flat bit at the end here, because that's reflecting how the market's trading here in this current candle that's forming. So it hasn't fully formed yet, so we don't have any indication of how that will end up. But looking previously for the candle that's completed trading, the Kijun-sen and Tenkan-sen are once again pointing down very sharply, reflecting the solid downside momentum, and this does suggest that there is potential for this market to trade to lower levels, and the Chica span here is below the corresponding price action, so confirming this negativity that we're seeing in all 3 timeframes. So overall, we have a bearish market in all 3 timeframes. The sellers are in control. They lost some commitment around the 100.43 level. It is a crucial level. $1 is a target down here if we do trade down through 100.43, and we should see some strong buying support coming down around the $1 round number.